Hi, this is Calvin here. Welcome to this week edition of Weekly Technical Outlook on the major stock indices, where I'll be sharing with you all the key levels, the technical configuration, as well as the trend bias for this week on the S&P 500, the Nasdaq 100, the Hong Kong 50, as well as the German 30. So as we know that we have 4 more weeks to go before 2020 ends, and very interestingly, last week all the major benchmark US stock indices managed to actually shape new fresh record high, both in terms of daily as well as weekly. So going forward, can this rally be sustainable for the US stock indices, or do we see a major reversal from here? All right. So before we get started, let us take a look at the disclaimer slides first. Okay, good. So to answer that question, whether what's the possibility do we start to see a major bearish reversal on the US stock industry from here, and as well as the global stock market? One of the particular sectors that I like to watch will be the semiconductors. So these semiconductors, I'm actually using the SOX ETF, which is, as you know, that semiconductor is a proxy of global growth. So if there's more demand for semiconductors, the price action of semiconductors will go up. So this particular chart, what I'm sharing with you all is the 3 months to date performance of semiconductor versus the SPX as well as the Nasdaq 100. So as we could see over here is that the 3 months to date on this SOX ETF, which is the semiconductor ETF, is actually having a very strong outperformance against the SPX as well as the Nasdaq 100. So it's up 21% 3 months to date versus the SPX is only 4.5%, as well as the Nasdaq 100 is only 1.6%. So what we could see over here is that semicon being a proxy of global growth, it actually showing a further upside in terms of economic recovery play, which translates to further potential upside on the global stock market as well. So if I taking into account of the price action of the SOX, which is the semiconductors ETF, the probability of seeing a major bearish reversal on global stock market and even on the SPX 500 and the Nasdaq 100 is rather relatively small compared to the price action of stocks at this moment in time. Then I also take a look at this is the chart that I shared previously in my daily commentary, which is the stocks ETF. In long form, is actually the iShares Philadelphia Semiconductor sector. So in the ticker is SOX ETF. So this particular ETF, we do have it in our next gen trading platform as well. So right now it's approaching my resistance or target, which is 379.95 slash 383 383 figure. So what we could see, yes, the RSI is a bit at the extreme overbought level in terms of the daily chart. So what we could see potentially we may do a bit of pullback at towards 35370 before heading up much potentially higher to target the next target, which is the Fibonacci extension cluster at 39590 slash 40580. So from a performance perspective, relatively compared to the SPX and the Nasdaq 100, the semiconductor sector stocks ETF is still outperforming. And in terms of technical analysis on its individual chart, which is as shown on this chart itself, on the semiconductor stocks, there's still no clear signs of bearish reversal yet forming on the chart, and potentially technically it could still see further upside potential. So overall, it will be still positive for global stock market in terms of the technical configuration on the SOX ETF and its outperformance against the Nasdaq 100 as well as the S&P 500. Good. Now let's take a look at the individual technical configuration, the trend bias and the key level to watch that for the following four stock indices, beginning with the SPX 500 first. Okay, let me take you through our CMC Next Gen platform. Okay, let me start with the SPX first. So what I'm going to highlight to you is this very long-term chart that I charted, which is the monthly chart. So everybody is pretty much concerned previously about this spending wedge configuration, where the top of the spending wedge which resistance is at 36.70. So last week we have a weekly close above 36.70, which actually implying to us that potentially the SPX could actually shape a much higher high going forward. So let's look at the daily chart from here. Okay, daily chart is we do see a clear break from here at this moment in time as well. So the RSI previously has this bearish divergence, so bearish divergence totally invalidated. So over here is right now is actually trying to inch upwards towards the overbought zone over here. Haven't reached the extreme overbought level yet, as seen previously on the 2nd of September. And the pullback of this expanding wedge resistance now turns into a pullback support is around 36 40. So what we have on the strategy chart, which is the 4-hour chart. Okay, let me show you a bit. So from the 4-hour chart, the key support to watch for this week will definitely be this 3518. So just to give a bit of recall, what is 3518? So 3518 is actually the pullback previous resistance, pardon me, which is the swing high of 3rd of September, turns into a pullback support that was previously supported on the 10th of November and 13th of November. So this definitely will be. Oh, okay, sorry. Let me. Okay, let me adjust again. Because there's a slight adjustment. Okay, so this 3518 will definitely be the key support level to watch for this week to actually maintain our bullish biasness going forward. So looking to actually see a further upside to target this 3770, which is a feeble projection of 1.618, taking from the low of 21st of November. Breaking above 3770 should take us higher towards the 2.618 feeble projection, also taking from the same low at 31st of November at 38.80. So nevertheless, if we have a daily pardon me, if we have a daily close below 35.18, then this bullish bias will totally be invalidated, and we see a reintegration back into the this very complex sideways range configuration to actually target the 31st October low at 32.30. Now moving to the Nasdaq 100 index. Okay, for the Nasdaq 100 index, so what we could see over here, this is the daily chart. Daily chart, a clear breakout from this kind of symmetrical triangle range configuration, where the previous symmetrical range resistance now turns into a pullback support at 12055, which also coincide with the previous 13 October swing high as well. Daily RSI still remains positive, hasn't reached the extreme overbought level yet at this area, which is at this 80 level mark over here. Alright, and previously this 80 level mark actually confluenced with the swing high of 19th of February as well. So still pretty much positive in terms of the medium term upside momentum. Then on the strategy chart, which is the 4-hour chart that we share with you all. So on the 4-hour chart over here, it actually after this bullish breakout of this symmetrical triangle, okay, range resistance is now evolving in a kind of a very short-term ascending channel. The top of the ascending channel actually coming in at 12765, which actually confluence with the 1.618 Fibo extension level projected from the low of 11th of November, and the two time is coming in at this 12,970, 13,100. So what I'm expecting over here is, as long as this 12,055 key medium term support for this week hold, which is the pullback support of the former symmetric triangle resistance, see a further push up towards 12,007, pardon me, 12,765. A break above 12,765 should take us higher to 12,970 slash 13,100 level. So nevertheless, if we start to see a daily close below 12,055, it will actually invalidate this bullish bias to see this kind of a corrective decline back towards this symmetrical triangle range configuration to target 11,570, maximum 10,960 level. All right, so now moving on to the Hong Kong index, the Hong Kong 50. So if you look at the Hong Kong 50, it's still relatively weak at this moment in time, at least in the short to medium term. Key resistance definitely will be at this 26,740 slash 27,400. What's this level? It's actually the former swing high area of this March 2020 as well as June 2020 that has been rejected twice in the past, and as well as this descending trend line resistance that is in place since the all-time high of Jan 2018. So this is actually a monthly chart. So definitely this level is very, very key in order for the bulls to actually come back into this Hong Kong 50 market, to actually take us much higher to actually test this range top at 31,890. So for now, in the short term and medium term, it's still relatively weak as compared to the S&P as well as the Nasdaq 100 technical configuration. Now going to the daily chart over here. So as you could see the daily chart over here, the RSI, after shaping this bearish divergence signal, it started to shape another lower high from here. So all in all, what we could see is that upside momentum in the Hong Kong 50 index is still pretty much absent at this juncture in time. So what I'm expecting is over here, potentially we may start to see a bit of setback on this Hong Kong 50 index after this failure to break above that 27,400 major resistance. All right, so go on to the 4-hour chart, the strategy chart. So no change in my strategy from last week with the SS pivotal resistance at 27,400. Still looking for a kind of a push down or setback to actually target this near-term support at 25,890. So definitely if we have a 4-hour close below 25,890, it could take us much down lower towards this next support at this 24,950. So what's 24,950 is actually the previous swing high level of this 23rd of October 2020, as well as close to this pullback support level of this former descending resistance that has already been taken out previously on the 4th of November. All right, so now moving on to the last index I'm going to share with you all will be the German DAX. All right, so let's go to the German DAX over here. Okay, it's taking a bit of time to actually load it up. Okay, so let's start off with the long-term chart of the German DAX first. So for German DAX, right, it's still, yes, in the long term, it's still inside this bullish major ascending channel in place since the March circular low of March 2009, but it's still trapped at this all-time high, which is the ceiling at Jan 2018, which is close about 2 years ago, still refusing to break above this 13,800. So after this 13,800, we break out a proper what I call at least a daily close above this 13,800, preferably a weekly close better still, to actually take us much higher towards this 15,020 level, which is the next target, the upper boundary of this long-term major ascending channel, as well as the 0.618 Fibo extension level. Okay, taken on from the low of March, projected from the low of March 2003. So now moving on to the daily chart, let's see what we have on the daily chart. All right, so daily chart, right, is still pretty much stubborn since this 13,800 all-time high, which is also the February high. It's refusing to break above this kind of descending resistance that is tested once, tested twice, and now it's actually refusing. It's actually playing around at this descending resistance, which is depicted in pink. So all in all, right, what we could see is a pretty much sideways formation that is taking shape on the German 30 index. So if you look at the RSI still has this very stubborn resistance at the 65 level. Tested one time, two time, three time, fourth time, and it refuses to actually goes above this level, and it now starts to turn down below this level, which telling us that the medium term upside momentum is still absent at this moment in time from the German 30 index. So with this kind of technical elements, I'm pretty hesitant to actually play a bullish breakout above 13,450. So what I have for this week on the German 30 index, that I would actually stay neutral between this 13,450 and as well as the bottom of this range, okay, which is has been taking shape since 10th of November at 12,880. So unless we have a kind of a 4-hour close above 13,450, then I will validate a push up to at least see a retest close to this his all-time high level at 13,800. But on the other hand, if we start to see a a 4 hour break below this 12,880, then we will start to see a kind of a corrective decline within that very range configuration, that multi-month range configuration, to target in first step at this 13,325 level. So what is 13,325 level? So 13,325 level is actually a Fibo retracement. Let me share with you all, taken from the low of here, push it up towards this high. So it's close to that 50% Fibonacci retracement of this recent up move from 13th of October all the way up to the to this 30th of November, which is corresponding to the descending range resistance that is in place since 13,800. So pretty much neutral stance on the German 30 index. So that's all I have for now for our weekly technical outlook on the major stock indices. So have a great trading week ahead, and I see you all next in my next video.